Hey, good morning, good afternoon. Good morning, Bob. All right, give me a minute. I'll just finish my setup, make sure everything is right, and then we will start another interesting week. For sure, Jay. Yeah, I thought we just turned around during the earlier part of the week. Everything ended green, and then came back down. But at the end, I think we still ended up green in the markets. But it's just a start. I guess we still have to wait and see. All right. So yeah, I mean, if you just look at, that's what I was looking here, is first 2 days were, I think, the what was it, the two best days after March since March, or I mean in last 2 years, that in 2 days S&P was up more than 5%, right? So, and then we quickly gave away those gains in last 2 days. So eventually we did end up a little bit higher for the week, but I would say barely. Yeah, still way below. I mean, a lot more to catch up. Sometimes the things that are good for the economy that don't look good for the stock market. So we'll see. AMD, yeah. Again, we can talk all we can about these stocks, but why was anyone surprised that the PC shipments will slow down? I mean, all we have to do is just look around. Kids are back in school. They don't need extra laptops at home. Everyone in 2020, 2021 bought a lot of hardware already. And those are the things that they last a few years. I wish they lasted as long as they used to, but they still last 2-3 years. And so yeah, weakness seen on the PC market brought AMD down. And I think in sympathy, we also saw NVIDIA and Intel. The Ethereum change is hurting NVIDIA plus AMD. Not really, I don't think so. NVIDIA, they anyway had moved their chips from Ethereum, their gaming chips. They modified the logic so that the gaming chips can no longer be used for Ethereum mining. They did that change a year ago. But of course, the gaming also has come down, and the data center has not grown big enough to compensate for the little bit slowdown in the gaming. So that's why both the NVIDIA and AMD are having tough time. Why only these two? I think even Intel. So semiconductors is always very cyclical business, right? And now with a lot of new capacity being added, we know Intel is investing, TSMC is investing in US. And last week there was a news on Marvell. I think they are also investing maybe $80 or $100 billion to create new memory chips. So it's a cyclical business. I think long-term data center, gaming, AI, metaverse, these things are still the tailwinds. But short-term, these stocks are being challenged by the basically all the tailwinds of the COVID that no longer exist. So anyway, so yeah, so I think I do have to talk about AMD and NVIDIA, but I do want to talk a little bit about treasuries, right? Generally, we don't look at treasuries, but they are gaining a lot of popularity among retail investors, and why not? If you can get risk-free 3%, 4%, then why take risk for getting 8 to 10% in the market? So we had a family gathering, and a lot of my friends were interested in iBonds, and US Treasuries. How do you do that? So I spent some time in figuring out where do you buy it, how do you buy it, why should we buy it. So I want to share that in today's session. Also, I came across an article in Bloomberg around an Apple business, which we generally don't realize that how quickly Apple built some business into a multi-billion-dollar businesses. If that business is standalone business, it would count to be one of the big companies in US markets. So I do want to talk about that as well. And of course, we look at macro and some things in the news, in the charts, and anything else that you have in mind. A little housekeeping announcement. I'm expecting Plumber to drop in between 11 to 1. That's the window I have. I don't know if if it comes in by that, great, or if it is a little late, that's fine too. I might have to step out if I see someone at my door. All right. Okay, so let's get going and start with today's session. As always, everything is educational, nothing is investment or tax advice. Okay, let's start with the macro. I thought after the September, what we saw in the month 09, maybe it's a time for October. At least the first 2 days, I think that we were just talking about the first 2 days of the market. I thought maybe it's time for October now. We had some great first 2 to 3 days in the market, but not really. We gave up a lot of those gains, but eventually we did end up higher. But what a tumultuous way, right, of going through the whole gyration of going up 5 to 6% in 2 days, and then gave up all those gains. Essentially, nothing much changed. Jobs data came in, which looks like we added decent amount of new jobs, 263K. And that means if the job market is high, Fed is not going to budge. They're not going to pivot. They're not going to be dovish. They'll stay hawkish. And the market doesn't like it. Other thing, unemployment rate also dropped. So now this is matching 50-year low. So there is no way Fed is going to pivot. So any hopes of Fed pivoting after, Bank of England pivoted, Bank of Japan pivoted, we thought maybe US Fed will pivot, doesn't seem to be that way. So if the job market is still strong, inflation, it's difficult to tame the inflation, right? Recession will come in. After recession, the next step would be folks start to lose their jobs, then they'll start to reduce the consumptions. But job market is still going pretty strong. We still have, I think, 10 million openings. Dave says, like your title. Thank you. Yeah. But for me personally, I think September was one of better months when it comes to just options, not overall portfolio, because I still have a lot of long stocks, but doing the hedging trades, September turned out to be one of a better months. I think second or third best month till, in first 3 quarters, because most of them were, majority of the money made in September is through the hedging trades, call spreads or covered calls. And they work beautifully when the market goes down. But what else did we see? We saw OPEC Plus meeting. It was, you saw Russian energy minister taking a meeting in Europe on one hand, and on the other side, Europe, Russia, and US are fighting on the Ukraine border. But yeah, so net, OPEC Plus announced that they will cut down 2 million barrels. That's a headline number, but the actual impact will be around 800,000 barrels because anyway, they were not producing the quota. They were 1 million barrel or 1.2 million barrel short of the quota anyway. So now they're saying they're going to cut 2 million from that quota, means net impact is 800,000 barrel per day. But whatever it is, it's going to increase it'll make the price of energy a little more expensive. California, we are back to, at least the pump near my house, we are back to more than $6, guys, more than $6. And a few weeks ago, I felt it less than $5, like that teasing price is 4.99, but now it's back to 6.19, the lowest quality grade fuel. So that means 20% jump in gas price. So yeah, let's see. Looks like from US side, we have lost the influence that we used to have had on our allies in Middle East, despite US kind of a hidden threat to Saudi Arabia and the OPEC countries to not consider these cuts. They went ahead and did it anyway. So crude is above 90, and I think that was the one sector that performed well. I think that energy was the best sector for this last week. I see a note, some guy VIX calls, 150 calls, 950,000. I also read that. I think that's March 23 calls, if I recall reading about it. But someone took a huge bet that VIX will be, is it? Yeah, late March, correct. Yes. Now it is difficult. I don't know, but yeah, someone did take this call. Is it the 50 cent? Was it 50 cent? I remember it was in 2018, 2020. There was a chatter about someone trader called 50 Cent who was famous for buying out of a money cheap VIX options at around 50 cents. I don't know if this one is the same one or not. Is this a 50 cent option? Or was it a different one? I don't know, maybe. So now those are trading at 32 cents. Let's see. Yeah, someone did place a big bet of almost $1 million to buy those call options. Let's see a comment from Dave. Got to be very careful trading crude oil related products, very geopolitical. You got out of your ExxonMobil shares after being red for months, except getting monthly income from covered calls and dividends. So I had ExxonMobil. I had exited way before this whole Ukraine conflict started. So I'm like, why did I do that? Because that time my thesis was, which still is, that long term, these things will go down. So I had some ExxonMobil position I sold off, but I still am retaining my position in AMLP because it's a nice dividend play. It gives you around 8 to 9% dividend. And that's one which I've been holding for 2 years, have done really well. And this year I started, because I'm like, I'm done with these individual shares because I don't, I had ExxonMobil only 100 shares. So wasn't a really big position. That was like this year I was focused on reducing my number of tickets. So I thought, okay, let's get rid of ExxonMobil. I am not don't have expertise in evaluating energy sector anyway. So now I'm doing XLE, and the other one is AMLP. It's a Illyrian. That's basically my dividend play. I started building position on this in 2020 in retirement account. So I have like bought some at $22 in my wife's account. Bought in my account, I think I bought at $30. It's a nice dividend play for me. The other one I started building this year is a position in XLE, because I'll pick up an ETF rather than picking up a single stock like Oxy or ExxonMobil or Chevron. I mean, there are great, but so I built some position in XLE in my option account. So I have 100 XLE, and then I've been doing kind of a selling strangles around it. So that's my play on energy. Okay. This says bought Kinder Morgan. Yeah. Kinder Morgan is a pipeline play. And I was interested in Kinder Morgan, 4 years ago? Studied about it, put some money in it 4 or 5 years ago. Didn't move much. So I'm like, okay, leave it. I really, this is not an area where I have strength in terms of business analysis. That is why I'm like, okay, I'm not picking any individual stocks on energy anymore. I do want to diversify my positions. So I do want to hold metals, want to hold energy, want to hold others, but where I don't feel that I have a strength in reading and understanding about businesses, I'll focus on ETFs. So that's what. For energy, XLE and AMLP are the two. Cool. All right. So yeah, so far crude is doing okay. And I think the world now realizes, including me, I also realize that the underinvestment over the years in crude is now starting to show up. We see the impact of that now. So I do want to hold some crude position in these oil producers, and that's why XLE might play. So overall, markets are still bad, guys. We, as compared to last week, we did better, but barely better. S&P is still down almost 23.5%. For the year, NASDAQ has lost 1/3. Other ones also have not done any better. So let's see where we end up by the end of a year. I don't know. Are we going to get Santa rally or not? This first three, I think I do have a chart later on. So maybe we'll talk about that then. But generally, Q4 on an average is positive. Sentiments, Santa rally, and also people want fund managers have to show their good performance. We'll see. Anything that have happened in the past, the past performance is no guarantee of future. But let's see if history rhymes. But so far, it's down. We are down almost 25% on the markets. Sector-wise, energy was the best, up 14%. Overall, barely up 1.5%. So not much of an excitement, but these areas when you don't have an excitement, I love these markets. If you're not going anywhere, all we do and sit is just gain from theta decay. So like I said, September was probably one of the better months when it comes to the options trading. But when it comes to the stock positions, that's where it hurts. All right, looking at the fear and greed index, we are still in extreme fear, and we are slightly better than the last week, but we are still in extreme fear. And what we also saw is retail investors are heavily hedged, right? The SH ETF, which is short ETF for S&P 500, has not its best year of inflows ever. Right? 2022 is where the and this is an instrument which a lot of retail investors use to hedge their basically get the protection. It's an inverse of S&P, and it's got the best year investment inflows ever. And sometimes when you have the best or the worst, when it related to the retail investing community, that may be a contrarian signal, right? When we saw the SPAC mania, all the SPAC were getting the inflows in the SPAC were the highest ever, and then we all know how did that end up. The crypto retail behind it, and now all 50% down, 60% down. Now we may be witnessing it in a reverse direction. Is most of the retail investors, they are piling up into protect these short ETFs, inverse ETFs, and at least the SH has its best inflow ever in its history. So we'll see. I mean, last week we looked at some of the signs of a bottom. One was everyone is loaded with your either protection strategies or inverse positions has gone too short. Maybe we'll see how did this play. I see a comment saying usually a huge sell-off usually bounces off to the upside on the close, but yesterday there's no let up at all, including potential further slide on Monday. Let's see what Sunday futures go. Yeah, I actually didn't wasn't watching market yesterday, except I think I was active only till 8:30 in the morning, and after that I had a series of meetings. So but at least I was looking at it yesterday, not today morning. I didn't see too much change on my portfolio though, because I think some of those hedges still worked out. So overall, not a big change. But yeah, now I see market gave up most of the gains that we had in earlier part of the week. So let's see what Monday brings for us. Always excited to see a new day. You never know what might hit you on that particular day. But irrespective of, some things you can see coming, some things you don't. But the trick is to be ready for anything, right? That's why sometimes I love taking both sides of the position. If I need to, if I'm a little bullish on a stock, of course I'll sell a put spread, right? But yeah, I may also want to sell a call spread or a covered call along with it, right? I don't know where market might go. The trick is to be ready for anything. If it goes lower, all right, the call side will help. If it goes higher, okay, I have the put side. So that's at least that's my plan, is to just keep a check on deltas and make sure we don't either go too negative on the deltas, and which means we move towards one side of the boat saying, okay, it's going to be very bearish, nor I want to be too high on deltas, means I'm becoming too bullish. The idea is to find the balance of what's your overall portfolio delta has to be. And I think so far this year I've been pretty okay. I didn't do a good job in 2020. I started hedging too heavily on 2020. Although I could have made a lot more than I did. But this year I think I'm trying to find a balance of what's my equivalent delta which I'm comfortable with, and just stay within that range. So let's talk about the bigger topic for today, which is around treasuries. I see a lot of chatter among my friends on buying iBonds. And I know we covered the iBonds topic a few weeks ago. So, but let's do some refresher. But today I also want to add the general treasuries, not just the iBond, but T-bill, T-notes, how to buy it, why we should. And let's see, if you find this interesting. I mean, well, first of all, a question: Have you already bought these treasuries or iBonds? Do you know how it works? Any experience with these? Me personally, I'm not bought, but I'm trying to understand on how these things work. All right, let me see a question. What do you think about VYAM SCHD? So Dave, when I was looking at high dividend yield ETF, after I think I looked at 6 or 7 dividend ETF, I eventually zeroed down onto SCHD for 2 reasons. Number one, its expense ratio is very less. Number two, it's optionable with a decent bid-ask spread. I also looked at Noble, which is dividend aristocrat ETF. I looked at a couple of Vanguard ones. Of course, Vanguard has a lower expense ratio, but then when it comes to options, the options were, the bid-ask spread was very wide. I don't know if VYAM was one of those or not. It's been a good. This is the V or no, like VYAM. Oh, they don't even have options. Or VYM. Yeah, I did this exercise, I think, like 2 or 3 years ago. High dividend yield ETF. So other thing is, let's want to be sure of when it's a high dividend yield, is it coming for dividend aristocrats or is it coming from the companies in which currently we are seeing high dividend yield? So the reason why, so I had SCHD, and that was my go-to play when I was had my dividend play, and other one was Noble, because these two ETFs actually hold the companies which are really solid companies, and hence they are able to give a dividend. So it means the possibility that they will continue to give dividend is higher. Right now, the high dividend yield ETF, again, I don't know VYM, what's in VYM, but if it is only focused on dividend yield, then the risk is that the yield may not be sustainable in future, right? Because the underlying, there may be a reason that the stock price has come down and hence the yield looks higher. And in that case, I probably would not want to be in it. So my go-to place for dividend yield has been SCHD. Chintan says, has invested in iBonds. The max is only 10K. We'll talk about a little backdoor entry to get another 5K. Dave says, added some BRKB yesterday. So in my option account this week, I added a little bit of a Google. I added Doximity. I added Ford and EEM on the stock side. I hold, I think, stock, all these anyway, so I added a little bit to my positions, long stock positions this week by adding 4 more tickers. QYLD. Right. Let's look at QYLD. It's a covered call ETF. I actually don't question from Sadiq. So I think I have not looked at it because I mean I do covered call on my own, so I don't really want to pay 0.0, 0.60 basis points of expense ratio. Right? I would rather do and take the covered call positions myself and generate from there rather than paying them. So I have not looked at this. Bought a whole bunch of QQQ, TQQ, SPY, Microsoft, Apple, Disney. Yeah, some of these, the days when we see markets falling for, by 3%, 4%, those cash flow generators, the list that we saw 2 weeks ago, those companies in this environment could be a great companies to keep in our watch list and see when we see the blood in the market and these companies fall down. Microsoft is one, Apple is one, Google is huge cash flow generator. So those, there was a whole list that we looked at it, I think 2 weeks ago. Yeah. Yeah, I look at my position and see, okay, the market is today in red, or when the markets are in red, I do want to see, okay, what I want to pick up. Okay. All right, let's talk about treasuries. Cool. Oh, by the way, I'm seeing a lot more this like Barron's and Bloomberg's are now talking a lot more about instruments, and we have covered some of those instruments during some of our sessions, which basically simulate the collar strategy on against your stocks. So we saw emergence of buffered ETFs. I think the technical name is called buffered ETFs, which basically will provide you, will give you a buffer on the downside that any losses below a certain percent are covered. But the cost is you also have to cap your upside gains, which is essentially nothing but putting a collar around your position. But I'm seeing a lot more such instruments coming into the market because right now the retailers are scared. Retail investors are scared, right? Not sure what to do. We open our brokerage account, you see things in red, and if you don't know how to use options to hedge your portfolio, there's nothing much you can do but just wait, right? And not everyone may have a patience and wherewithal to go through 40% drawdown and still be in the game and wait for the markets to turn around and come back. So there are some expensive, high expense ratio instruments that issuers are now bringing to market and marketing them to a lot of retail investors. We saw the same thing around annuities, in which now we have annuities which are stock index, plus they are the same protection which you can get by putting a collar position. Now we are seeing ETFs doing the same thing. So, but at least good to see the validation of the strategies that we've talked about earlier. Now, Wall Street is coming with an instrument that allow anyone to make use of, but of course it comes at a high price. If you do it yourself, it's free. All right, let's get into treasuries. The reason I want to get back into treasuries is, like I said, we had a get together, family get together, and everyone was like talking about iBonds, 9.62%, and that's a headline number that catches the eyes of retail investors. And when I was talking to my friend, he said it's a great return. 9.62 is great in these times when you don't know where the stocks are going. I'm like, absolutely, but be aware that 9.62 is for 6 months. And first thing, I was a little surprised and say, oh, what do you mean? I'm like, when you buy iBonds, It's only 9.60 is only for 6 months, and after that it will reset. So number one, do your homework. Unfortunately, my friend, he did not. He thought the 9.62% is gonna stay forever, right? So I thought maybe I'll cover it again. So right now, this iBonds is paying 9.62%. Right? Oh, they changed their website. Oh no, sorry. Oh, they changed the layout of the website, which is better. This is much better, right? So what are iBonds? So these are inflation protection. You can buy iBonds so that the cash, if you just hold in cash, the cash is losing its value against the inflation. So iBonds are kind of considered as inflation protection bonds, right? A type of a tips. And right now it's yielding 9.62%, right? But the 9.62%, it is taxable at a federal level, but not at a state level. That also applies to the other treasuries as well. Minimum purchase is $50, and you can buy it directly on this website, or you can buy it and get a paper bonds. So there are two ways. One is you'll have to create an account here on Treasury Direct. You basically create your own account, log in, you connect your bank account with it, transfer the money from your bank account, and then you can buy the bonds, iBonds. And now when you buy it through this, there is a maximum limit, which Chintan was talking about. That is a 10K per SSN. So if you have significant others, if you have kids, you can buy on for each SSN, you can buy 10K of it. Right? Now, there is another backdoor entry to get another 5K, which is through this. You could overpay your taxes, and then when you file your tax return, you see a refund coming in. You can direct the refund to, instead of getting back the cash, you could opt to get another $5,000 in paper iBonds. So maximum you could do, I guess it's 15K, 10K directly, and then another 5K through this backdoor entry by getting tax refund. Now, when you buy through paper iBonds, that means if you have to redeem it, you'll have to send back the paper, and there's a long process involved in it, right? So be aware of that process. Now let's look at how does it earn interest. The interest is compounded semi-annually. So these bonds have a lifetime of 30 years, right? But it is compounded semi-annually, means that after every 6 months, basically they will add it and then apply to the principal value. Right? Now, how long does it generate interest? These bonds lifetime is 30 years, unless you cash it, before the maturity, which is 30 years. Now, other question is, guys, I don't want to lock my capital for 30 years. What can I do? You can redeem it after 12 months. You can't redeem it before 12 months, right? So if you buy through your on Treasury Direct, you cannot sell it before 12 months. So if you need money, any money that you need in the next 12 months, don't put in iBonds, right? There are other avenues which we'll talk about, after iBonds, but don't put it in iBonds. Right? But if you encash it, if you sell it before 5 years, you will lose 3 months of interest. Okay. So say if you first of all, you cannot encash it before, you can't sell it before 12 months. Say if you sell it after 18 months, you're going to lose 3 months of interest. So you'll get paid interest only for 15 months, right? So that's a 3 months of interest that you will lose. Taxes, federal income tax, yes. State and local income tax, no. And federal estate, gift, excise, you'll have to pay all tax, all those taxes. Right? Electronically, minimum is 20. Oh, it's 25, not 50 anymore. Paper, it is 50. Sorry. Yeah, electronically, if you buy it, you have to do minimum of $25. If you want to go through the paper route, you'll have to do minimum 50. And like I said, you can have up to 10,000 in electronic bond and up to 5,000 with your tax refund. So maximum, you using both these avenues, maximum you can invest is $15,000 per year in per SSN. Right? Not bad, 15K. Now today, everyone wants to do it because the interest rate is 9.62%. Right, but they changed the website. So where do I see the other one? Okay, so let's look at the interest rates. Right. So how do they calculate the interest rate? And this is not constant. Interest rates will change. Now the next change is coming on November 1st, right? So the interest is constituted of two components. One is a fixed rate, and another one is an inflation rate. Now today, this 9.62 looks so attractive because the inflation is high. Okay. And they do have a way to calculate what your composite rate would be, what's the combined rate would be. So today, right now, the bonds, which if you buy between May through October 2022, means if you buy the bonds today, they're going to earn 9.62% for the next 6 months. And the calculation works this way. Fixed rate is still 0. Inflation, which is semi-annual inflation, is 4.81. They run a bunch of calculations, and that's here your overall annual interest rates on these bonds come out to be 9.62%. Now, these interest rates will change. Now, I think now it's gonna, so they'll do a fixed rate will be announced on November 1st. We'll see what that would be. And then the interest rate changes on, May 1st, November 1st. If the bonds are coming in June, then it'll change to June 1st and December 1st, things like that. Now, let's look at, so these are the fixed rates for the bonds in the past. Then you have, these were the inflation rates, which is used in the calculation of finding the composite rates. So these are the composite rates if you had bought the bonds between this during this period. So which means the one which is currently active is 9.62%. Now, what it doesn't show is what's the historical one, right? 9.62% looks great. And somehow I find this table to be a little misleading if you're not paying attention of what exactly this table means. If I just look at this, I'm like, wow, from 2005 to 2006, these bonds have been paying 9%, more than 9% throughout many years, right? 11%, 10.77%, 11.72% November in 2002. But that's not the case. If you really want to look at this table means something different. This table means that if you had bought a bond during this time period, that bond which you had bought during this time period is earning 10.67% for these 6 months from May to October 2022. So you have to be careful when you're trying to interpret this table, because this was one of the questions my friend asked. He says, I go and look at it, it's always been paying more than 9%. So what do you mean that iBonds hasn't been a great investment? Because I'm like, nobody had talked about iBonds. People are talking about iBonds now because it's paying 9.62%. But he told me, no, on the website, it shows that it's always been paying more than 9%. So then I came like, what is this? So probably this is the only table I could find. It is a little misleading. If you really want to know, so today it is 9.62%. What was the rate for the iBonds that were announced, let's say 3 years ago, 5 years ago? So let's go back. I do have a table for it. Yeah, this was that misleading table. So there we go. So if you really look at it, right now, it's 9.62%. It will reset on November 1st, right? Go back to 2018 or the bonds that you would, if you had bought in 1st May 19, that time the rate of interest was 1.90%. Now, if I look at it and run through, the historical data, yeah, in some years when the inflation was high or the Fed rates were higher, the fixed rate was higher. Yeah, it did pay 4%, almost 5%. For some time it was actually negative. I found another negative interest rates here. I found 2.52% here, 1.96% here. Okay. So today we're getting these great rates because the inflation is high. And if Fed actually achieves its target of reducing the inflation to 2%, you won't be enjoying the 9.62%, right? This is not the fixed one for next 30 years. Let's be very, very clear about this. I don't think everyone understands it that this will change. And now if you look on historically, it's been a good investment, but not as great as 9.62, right? So it all depends on the inflation and the fixed rates. Not saying that shouldn't invest in, but let's make sure you are aware of this, right? What else? Yeah, we talked about it. We talked about this. We talked about paper certificate. Right. Okay. So other thing is tax reporting. Again, I'm not a CPA, so should consult your CPA. But when you cash in, the gains are taxable at ordinary income tax level, not at a capital gains tax. Right. So this will become like the tax that you pay on your CD. You could choose to report the gain every year, or make a final one when you do the full withdrawal. Choice is, you have the choice, but whatever you do, you have to stick to that. You can't change it, once you pick up a certain way to report your gains for taxation purposes. So that's about iBonds. Any other questions? Dave asked, iBonds versus CD. So Dave, on the both of them, I think on a CD, you have an option that you can add whatever amount you want to. iBonds are limited to a maximum. I would say iBonds are limited to 10K because that whole paper route is really pathetic. So I would consider only doing it online, which is 10K. So you have a limitation on iBonds of doing 10K per SSN. CD, you can invest as much as you want to. You could act right now. Let's go to Bankrate and bankrate.com and see what the many CDs are paying for. Right? If you can get a 3%, 4% CDs for 4 years, 5 years CD, you can actually lock that for next 5 years. Now, we don't know from an inflation perspective, if the inflation goes down, let's say 5 years. So you got a 3.5%. Marcus is from Goldman Sachs, 2.5% to 3.5%. You can lock it on for its longer period. From an inflation perspective, we don't know where it's going to go. So inflation goes down in, like Rob is saying, it's likely to come down in 6 months. There are signs of shipping rates coming down, inventory glut coming in. So if inflation comes down, iBonds will start to pay less and less, or do both. Yeah, or look at, let's say, Treasury. So let's talk about Treasuries. I don't think we ever spoken about Treasuries before today. So these are not the only options when it comes to the safety of principal. There are other options, which are Treasuries, typically T-bills, T-notes, and bonds. All these three are issued by US Treasury. The only difference why we call it bills, it's based on how much time it is for maturity. So if the maturity is coming in next 4 weeks, 8 weeks, 13 weeks, 26 weeks, or a year, it is called as T-bills. If the instrument will mature between 2 year to 10 year, it is called notes. Or finally, if it is 20 years or 30 years, it's called Treasury bonds. But essentially, all these are the instruments that are issued by US Treasuries. So why buy Treasuries? Reason one, it is as risk-free as you can get anywhere else, right? It's backed by full faith and credit of US government, that government won't default. So this is the safest instrument, at least even today, in the world, right? Whenever there is a problem, one world run towards the dollars because they buy Treasuries. Number two, it's got a favorable tax treatment as compared to CDs. Yeah, you get a state and local taxes exempted. Some cases they have a higher rate than the bank CD. Now this makes me interested in this, right? Maybe use the emergency fund, use Treasuries to hold the emergency fund and not the, let's say, bank CD, right? Number four, it is highly liquid. You can sell it through a brokerage account. You can buy it on your brokerage account. You can sell it on your brokerage account, and also the Treasury Direct website, which is this one. You can buy these treasuries on this website. Okay? But be aware of when you are selling it in the market, right? And this applies to, there were earlier, Dave had mentioned some ETFs, right? TBT, TBF, TMV. So I skipped that. I didn't talk about it because now it's the right time to talk about those things. So what is TMV? This is 20-year, this is 3x leveraged. Okay, first of all, me personally, I'm not a fan of leverage stuff. Okay, this is 20-year plus treasury. It's a short treasury. Yeah. So the only the reason I want to bring to this discussion around these treasuries, they also trade in open market. Right? It's like one of my favorite instrument to trade is TLT, which is 20-year plus treasury bond. It means instead of me buying it through Treasury or Treasury Direct, or me buying the bond through my brokerage firm, I buy it from the secondary market because someone is selling in the secondary market. And this is an ETF, which basically does that. Now, be aware when you're trying to trade or sell it in the secondary market. Right? The way these instruments have been created is whatever percentage they are currently yielding, and we'll look into the rates, right? Whatever rates they are currently yielding, those rates are valid if you hold it all the way till maturity. Okay, say T-bills is paying 2.5% for 4 week. 4 week is APY, but that APY is only applicable if you hold those T-bills till the maturity of 4 weeks. Now, okay, I guess 4 weeks is probably not a great example. Let's look at notes, right? You bought a treasury note for 5 years, whatever percentage its APY was, right? But now you suddenly realize that you have a need for money. You want to go and sell it in the market. Now, when you're selling into the market, that's where the trick lies. It is possible that you actually end up getting less money than what you put in. So when we talk about it's a risk-free, no loss of principal, it is applicable only if you hold till maturity. Because when you're trying to go and sell it in the market, now what someone is willing to pay for that treasury in the market is dependent on the interest rates. What's the interest rates currently in the market, right? Say if you bought these treasuries today, and now after that, the interest rates have increased. When you're trying to go and sell that same treasuries in the secondary market, you'll have to sell it at a loss. So be aware, if you're investing in treasuries, these rates, your interest rates, your yield is applicable if you hold till maturity. So be aware of that caveat. If you're trying to sell it in the secondary market, it could be higher, it could be lower than where you bought it. Okay. Also, and that is why there are instruments like TLTs, which are ETFs. There are other instruments or ETFs that basically you can buy and sell it in the market, but then the prices of those are impacted by the interest rates. Now let's look at TLT itself, right? Why go too far away? Now, for last 1 year, right, the Fed has been increasing the interest rates. So what happens to the TLT? The value of the TLT has continuously started to go down. Inversely proportional. They move in opposite directions. Right? So if you had bought TLT over here and you thought, oh, this is a bond, 20-year treasury bond, right? It's backed by full faith and credit of government, but no, you're buying in a secondary market. Now the value which someone else is willing to pay for the bond that you bought at 150, because the government has increased interest rates, so now it's traded at $100. So buy this if you can hold it. Otherwise, depending on what the interest rates are, your treasuries, the price at which you will sell your treasuries could be different, right? You can create an income stream because the maturity period, I mean, we have so many different maturity period. You can create a particular plan for, gosh, I will need to buy a new iPhone, right? Which will be launched in 4 months. Maybe I can come and pick up, let's say, 26 week. Okay, 4 months would be, let's say, pick 13 week and a 4 week. I can invest in these 2 treasury bills. Or I need to invest somewhere for the next 1 year. I can pick up a 52 week. Right? Or you got a kid college coming up and you want to invest it for next 3 years, and then after that 3 years you want to want to take out money every year. Maybe pick up T-note for 3 years and then move into T-bills for 52 weeks, right? So you can mix and match and create any kind of an income stream, right? Because you will get paid at the end of maturity. If I invest in treasury notes for 3 years right now, At the end of a 3 year, I'm going to get back my money. That is protected by full faith and credit of US government. And then there are high limits. You can buy up to $10 million per auction, way beyond what I would ever have to buy. But I don't know, we might be having some millionaires in this group. So you have a high limit, which you can buy 10 million per auction. Again, there are auctions are two different types, in which one, you're just a taker. Whatever price has been determined by the markets, by the Wall Street and the banks auction, they participate in auction. And as a retail investor, I will just, whatever the price has been settled, I'll just buy at that. Right. SP says, go to TD website, search for bonds. Yeah, I do have a screenshot of where you can buy. Where did the screenshot go? Oh, there. I should have moved this higher. Okay, so on TD Ameritrade, I found where you can buy. You can go to trade bonds and CDs. There it will show you that, you know, what are the treasuries which are currently available, or you can buy directly on Treasury Direct. And I'm sure Fidelity, E-Trade, they also have a option where you can go and buy it on their website. See a comment from SP. I would stress if they are having margin on load in any way, I would pay that back before investing any bonds on T-bills. Oh, that goes without saying. But thank you for the reminder. So when it comes to investing, make sure your personal finance side of the house is already taken care of. Right? I hate any kind of a loan other than just a mortgage loan. And thankfully, I don't have, that's why I don't have any other loan. Pay off your high credit card loans, pay off the margin loan, which brokerage charges 8%. Some brokerage charge 4%, 5%. Pay off your personal loans, pay off your HELOC loans if you are, you know, extend the line of credit before you talk about investing. Right? Now, if you have a mortgage at 2%, then yeah, I would say, yeah, you can still hold on to that mortgage and invest in treasuries. But any other high interest loans, let's make sure we pay that off before we even think about investing in stocks or anywhere else. Jay asks, where does margin usage show up? I have a margin account. I do option. Haven't seen any fees for margin. So Jay, the margin will start to show up if you either have a short positions or if you have a cash negative position. So in that case, that's when you borrow from your brokerage. If you don't have that, you don't have to pay any margin fee because there is nothing that you're borrowing from the broker. So in your statement, when you get, it doesn't, I'm not sure where does it show up on the Think or Swim, but if you go and look at your TD Ameritrade, let's say the monthly paper statement, there it will show you what's the margin fee that you have paid. There you should be able to see. So because I had held a short position in, I think it was SPY for quite some time. So I was paying some money for that. But it does show up on the paper statement. Okay. Margin rate shot up. Yeah, I mean, I don't have right now anything on margin. So, but if you really want to borrow some stuff on margin, this guy, I think Interactive Brokers, what I've heard is Interactive Brokers have the best deals when it comes to the margins. Okay. All right, so let's look at what are the interest rates that these treasuries are paying now. So this is decent, right? Not bad. For a 4-week treasury, now these treasuries will be issued on 10/11, and they'll it's a 4-week treasury. It will mature on 11/08, and the interest that they're paying is 2.967%. It is APY 2.967%. Not bad at all. You can, if you have money sitting in your bank's checking account, you don't need it for next 4 weeks, and your bank checking account is probably giving you 0.01%, right? This is like 200 times better than it. Right? You get 200 times more interest if you don't need that money for next 4 weeks. And we are not even talking about for, planning for next 1 year, 2 year, next 4 weeks. But this time you should know, are you going to buy a car next 4 weeks? Are you going to go for expensive vacation? Are you going to buy a house? If not, hey, I got this bunch of money sitting in my checking account. Maybe I can get some treasury out of it, right? For 8-week treasury, the issue will start on 10/11. That was paying 3.291%. Right? So you can see what are the different interest rates on when those were issued, right? So now, if you see, there are two things here. One is called high rate, another is called investment rate. So the way these treasuries work is US Treasury will go and say, these are the treasuries available, we want to sell in the market. And then the big Wall Street firms and the banks will say, what interest rate, at what interest rate will they be willing to buy it, right? So the high is the one which was the highest rate that was offered, and this is where the actual they settled from at the end of all the auctions. So if we as retailers, if we are buying a treasury, we will basically lock ourselves into this investment rate. Okay. So now let's look at, when you're buying it, how does it actually work? So now if I click on this, I see this auction date is 10/06, issue date is 11, and the maturity date is this, right? So basically, this is when the auction starts. This is when whoever won the auctions, we don't have to worry about auctions. We just have to, we'll get this one, right? We are retail investors. We are not participating in an auction. So when we go to a brokerage firm and then say, okay, I want to buy this next 4 week, and you'll get this investment rate interest. Now, the way it works is these treasuries, their face value or the maturity value is $100. So if I am buying this through my brokerage website, and if I'm buying one, for per $100 which I will receive at a maturity, today I'll have to pay $99.77 to 889 cents. This is little in the reverse direction. Traditionally, we are accustomed to think I invest $100, and if it is paying me 2% interest, I'll get $102. These treasuries work differently. So when you say it's and I'll show you the calculation so that it becomes clear. So let's say you end up buying this treasury. You will pay today $99.77 to 889 cents. You're not going to pay $100. And now you hold these treasuries for 4 weeks. After the end of 4 weeks, you will receive back $100. So essentially you paid 99.26, you got back $100. This is how it works. Okay. So now if that's the case, and then must be wondering, okay, how do I know, what am I getting? What's my interest rate that I'm getting, right? So let's go back to the interest rate calculation. All right. So this is how the interest rate would work. So you bought at a maturity, you will get $100. Right now you're paying this 99.72889, right? The duration is 4 weeks. So your overall interest that you earned over these 4 weeks is 0.227, which is difference between these two. That's the interest, right? You paid 99 some cents, you got back $100. It means that's the interest you got paid. For holdings for 28 days, per day interest rate is this. Interest in full 1 year will be this. Your annualized APY is going to be 2.96% because you invested $99.77 whatever cents. Full 1 year interest, you would have gotten 2.906. Divide by that, 2.967293 is your annualized interest rate. That is what we see it here. So that's how the interest rate is calculated. Okay, I hope it's a little other way around. So let's say if you want to buy, instead of buying the bills, you want to buy notes, right? You want to buy, let's say, a 2-year note, which the interest rate was 4.25% when it was auctioned. So if we were to buy this, you were to pay 99.92 cents at that point of a time. Okay, so and after 2 years, you get back $100. So these are always sold at their discount value, and at a maturity, you get back the face value of the treasury. Okay, I see a question. So the short-term 4-week bills, you don't lose if the interest rate shoots up, right? As long as you keep it 4 weeks. Yes. So you invest in 99.77 cents. You hold it for 4 weeks. Once it matures, you basically will get $100 back into your account. And based on the calculation that we just saw on the Google sheet, that amounts to be 2.97% or 2.97%. Yeah. But now if you want to sell that same T bill in the secondary market, you may not be able to sell it at you paid this amount. Say you paid this amount to buy this, let's say on the coming Monday, and then a week later you say, oh gosh, you know what? I need money. I didn't anticipate this expense. Now I have to pay. I need money to pay for that expense. I want to sell it. Depending on the interest rates, you may get higher than this. You may get lower than this. Right? So that's the risk you run if you want to go and sell it in the secondary market. But if you don't want to take that risk, just hold it till maturity. 4-week planning is not really long term, right? Okay. All right. Now I'm actually interested in looking at this. Just till now I never bought treasuries, but now I'm thinking, oh, okay, why did I never study? Obviously, I mean they were paying pathetic interest rates earlier, but I think that maybe I can switch some of my long-term from a 5-year CD maybe to move it here. Anyway, so yeah, you can buy it on a Treasury Direct. So when are those available? So you will see these announcements on, say, if you're interested in buying a bill, right? Say 2 months. So you have an announcement date is 10/4. So right now for next week, nothing is right now announced. So this announcement date is the date on which it will show up in your brokerage account that it is now available. And you have to, in your brokerage system, you have to go and indicate what you would want to buy, how much quantity you want to buy before this auction date. Because 10/6 is the date on which it will be auctioned. So you have on 10/4, you can go to your, I mean, it's already passed. Well, let's see, what is there any, well, these are all the old ones. Where's the future ones? Let's see. Okay, so there will be something which was upcoming. Oh, there we go. Upcoming auctions. All right, so let's say this is 4 week. right? So now this 4-week with this QSIP number should start to show up in your brokerage account on 10/11. And then you got a day or two to go and indicate on through your brokerage how much you want to buy, right? Because you have to do that before the auction date. And then once you've indicated that, you will get those treasuries issued on 10/18. Okay? And then you hold it for 4 weeks and then get matured. You get 100, you basically pay whatever that discounted price is, and then on maturity you get back $100. So that's how it works. Cool. All right, so rates for recent auctions, we already saw this page is yeah, and now depending on how the market conditions are, the rates would vary, right? That's why every week we come and talk about, okay, now the 2-year treasury is at this rate, or 10-year has now exceeded 3%. They change every, depending on the market condition. So these are some of the historical treasury T-bill rates. So similar, there are T-bill rates for the notes. You can find T-bill rates for the bonds as well. All right, we talked about this. We looked at upcoming auction, where you can buy it. You can look at TD price rate. Where you can sell it, you can sell it on your brokerage account, or you can sell it to Treasury Direct, because these are the two places where you bought. But caveat is, if you're selling on Treasury Direct, you have to hold it. There is a 45-day waiting period. So you can't sell it before 45 days if you bought it on Treasury Direct. Number 2 is you'll have to mail them a paper form. Yikes, that sucks. That now to download a form, fill up that form, then have to mail them a paper form. And it will take them anywhere around 10 to 15 weeks to process that paper form, which is like yikes for me. So if I were interested and I want to do it, I would rather do it just with my brokerage account. I just don't want to take up the hassle of sending the mail forms back to Treasury Direct. And I don't know where the paper might get lost. Who knows what might happen? And then you have to wait for that much amount of a time. There is a 45-day waiting period. None of them works. So if I can do it on my brokerage account, great. That would be my way to go. Jay says, this is what I got from TDA website. Because this auction date is already passed, so you may not be able, that's why it looks like you're not able to select it. This auction date is announcement was 10/6, so you can buy it till 10/11. This is already over. This is already auctioned. It's done. We should have had this session last week if you wanted to do it in 10/6. That may be a reason. I don't know if, yeah, I guess that is the reason. The ones which are not available are because the auction is already over for them. That's a history. Cool. All right, so that's, I think, all about the treasuries. So we looked at iBonds. Be aware of the caveats around iBonds, how much you can buy, how much you cannot. And please, this 9.62% is not for the next 30 years. These things will change based on inflation. The guaranteed one is the fixed rate. So it's a combination. Let's go back to iBonds. So these iBonds interest rate is a combination of fixed rate and the inflation rate. Now, in some cases, let's say if you had bought these bonds between 1st of May and till October 2019, 0.5% is guaranteed. You'll own that for next 30 years. Today, if you buy that, the guarantee rate is 0%. All what you're getting is because of this inflation. So depending on where that inflation will go. That will actually determine every 6 months, it will determine what are you going to earn for the next 6 months. So be aware of that. Okay. Cool. Any questions on treasuries? No. And I would have never thought in my dreams that I'll have to dig into treasuries for to find some yield. I would love doing stocks, but here we are. Times have changed, and so why not? We need to improvise. Today, treasuries are yielding 3%, 4%. It's probably higher than if you had bought mortgage in last any time before this year. Probably a mortgage is less than what these treasuries are paying. So maybe a way to park some there and sponsor your mortgage. All right. No questions. All right, let's move on. Hold on, let me sip some smoothie here, and then we'll get into the next part. Do you find treasuries enticing? Do you think you'll be able to make use of it, or give me some feedback? No. Okay, do you find this information useful? Maybe after this, you may decide, okay, treasury is not for me, perfectly fine. But did this help you in making the decision? Oh, I just want to know, next time, should I even talk about anything related to bonds or treasuries? If it is not helpful. Okay, pretty silent. Are you guys able to hear me? Okay, as is good. What I would hate the most is I've spoken and then I suddenly, sorry, Vivek, we couldn't hear you. Okay, so you guys are still there. That's good. Alrighty, so let's move on. Jay, I think I'll just sell way out of money cash. You could put still pays better than bonds. Of course. So the only I think we can still do cash secured puts or maybe buy stocks, but there are genre of investors who would want to have the surety in for the, let's say, next 6 months. There is no guarantee on the next 6 months in the stock market. So that's the only difference. If you want a guarantee, then you have to give up on the performance, on the yields. There is always a cost. So this is something which is guaranteed. Is it the best instrument? Is the best yielding instrument as compared to everything else in the world? No. Right. So depending on what portion of your liquid net worth you want to hold it in different risk profile asset class, this is another asset class, I would say. We got a stocks, we got a CDs, we got real estate, we got a crypto, and now we got a treasury. Like crypto and treasury are on the two extreme of the risk spectrum. Cryptos or unsecured loans are the highest risk, and that's why they yield highest in the possibility of making the money on them. The percentage money is the highest because the risk is highest. And on the other spectrum, the lowest risk is CDs and treasuries or good old bank accounts. The risk is low. Anyway, so let's look at some other charts, tweets, and then we'll jump onto Apple's business. So I saw this in Wall Street Journal. One of the worst first 3-quarter performance dating back to 1924, 26, looks like. Here are the returns on portfolio of 60% stocks, 40% bonds. That is a traditional wisdom, 60-40. And this is how a portfolio of 60-40 has done in the first 3 quarters. This year, this is the third worst. Only 2 of them were worse than this third 3-quarter performance. One was in 1931, the other one is 1974. So yeah, if you look at different stats, this year, I mean, looking at it, you can pick any time period and you can find out how bad this has been. But even if you do not pick up, let's say 3 quarters, we know that the market is down almost 25%, which means 1/4 of the wealth is lost. It's a huge amount. So this one shows about the first 3 quarters. Now the other way to interpret, with someone who is a eternal optimist, would be, guys, this is the worst, the third worst year. We can't go any worse than this. Maybe then the Q4 will do better. Right? Who knows? I have no idea where the Q4 will go. I hope it goes better, but hope is not a strategy. So when we look at so today, you open a brokerage account and we look at our losses. So other thing was, psychologically, looking at our losses won't make losses any smaller, but it makes us feel smaller. And so only thing worse than losing in a portfolio is having to admit that you're a loser, as an investor. That's where our emotions kicks in. That's where our ego kicks in. And many investors hold on to a losing investment because, hey, if I actually sell it, until I sell it, it's a paper loss. But if I now sold the security, I've admitted that, oh gosh, I lost on this, right? And it might be hard for someone. So there was a study done around it on what people do, what a normal retail investors do. So most investors will avoid selling when the investment is down because you can pretend that it's a paper loss. Come on, man, things will work out. And suddenly it works out. I'm one of that. But I do, knowing it very well, that 25% will go to zero. On the other hand, you can't realize a loss without realizing that you made a mistake. So this is what we as investors need to work on. It is not personal. There's nothing personal in this. We looked at the stock, we did the study of it, it didn't really work out, that's fine. Doesn't mean I am a fool. Well, yeah, there were holes in my study, yeah, improve upon, move on, right? Selling at loss is so hard that many people freeze in the face of bear market. But great thing is for us is we actually have options available. We understand options. And even if on the side we have a bad market against our stocks, we can claw back some of those losses by doing options, do covered calls, do hedge trades, do call spreads, use or different strategies, do collars to reduce the risk so that you're making an intentional decision of where you're holding security and how to ride through this volatility. Other thing that we see retail investors do is put a stop loss, right? That's a very common way of, in the lingo, where's my SL? Is your SL 15% down? Is your SL 10% below your purchase price? A pretty common one. I don't like SLs. I don't use SLs, but many people do, right? Now, the study was around, great, you have a stop loss. Does that help retail? Has it helped retail investors in stemming the losses? Psychologically, a recent study found out that at least 40% of the traders, what they do is when the stock goes down, they actually move down their stop loss or threshold, right? Hey, I bought it at 50. Now I'm putting an SL at 40. Basically, it means that the stock goes down to 40, I get out of it. It means maximum I will lose is 20%. Because after that, the stop loss kicks in, stock goes down to 30, 20, 25, I'm out at 40. So, but what actually happens is almost 40% of online retail traders, what they do is the stock goes down to 45, they move down their stop loss to 35. Stock goes to 40, they move their stop loss to 30. So in fact, we keep digging on when you want to get out. So essentially, traders intended to quit, but they just couldn't. So the right way to manage this is you have your thesis of when you want to get out of the stock. And it shouldn't be based on the stop loss. It should be based on, oh, my thesis got busted. I'll take an example of marijuana stocks, right? I think we looked at that I've been in marijuana stocks in 2017, 2018, all the way through 2020. I got out, I think, last year. That was one position where I lost. My thesis was around the decriminalization, didn't move anywhere. Right? Thesis got busted. Happens all the time. That's something which was not in our control. Our thesis was around that, didn't pan out. I'm like, okay, it's a time to do my tax loss harvesting. So I had some marijuana ETF. I did a tax loss harvesting on that one. That's the time when you can take a position and say, you know what, I want to get out. Management, change in management, right? The overall market has changed in terms of the competitive strength, right? The products start to suck. So a lot of ways if you see that your thesis has busted, that's the time, take a stand, move out. But looks like a lot of traders, we just hold on to our positions because if we are selling out, it means we're admitting that, gosh, not the trade is a loser trade, it means I'm a loser. A lot of people take it too personally because this is investing. Don't take it personally. Don't let it lose your sleep. That's the worst thing you can do is having your investments cause you lose your sleep. What else caught my eye? Inverse Cramer ETF. There are a lot of people who are having a lot more fun in the stock market. And we had an inverse ARK ETF, SARK. Now another prospectus filed for inverse Jim Cramer ETF. And I always wonder what will be the position if Jim Cramer gets bullish on this? What would you do? But anyway, I thought a little bit fun. I saw is an inverse Cramer ETF coming in. AMD. So we saw AMD shares fell more than 13% at the start of a session. We were talking about it. And this is where AMD met its nemesis. It was down 13%. This is the new 52-week low for AMD. This stock has been a roller coaster ride. And I have watched this stock when it was $10. And then it became 10, 20, and then I will never get into this. But this stock has gone multiple places. So why did it fall down? AMD came and issued a weak guidance for their third quarter, right? So they say, guys, we are setting expectations that our third quarter results won't be that great. We are expecting weakness in third quarter results because the PC shipments is lower than what we expected. I mean, this shouldn't be a surprise to anyone that the PC demand will slump as compared to COVID, right? But they say we have a PC demand slump plus supply chain issues. Both were worse than what we expected, so we're not going to meet our guidance. And we also saw shares of Intel, Nvidia, they were also down. I was looking at the chart and I saw now AMD is available at their pre-COVID era, pre-COVID price. So if you're one of, like me who thought, oh, I missed the whole train, my favorite quote is now, train is back at the station. Now do you want to hop onto the train? I don't know. I still have to see. I never looked into AMD as a company. I've not studied what products it has or where they're trying to focus. I guess I might have to do that. But right now, I think NVIDIA, I hold NVIDIA in my portfolio. So I'm probably happy with this. Maybe now AMD is where, given where it is, maybe could diversify by adding one more chip company in my portfolio if I find some more time to spend on AMD. So, but despite this fall, its revenue will still be up by 30%, but 30% growth is not good enough when you had, 70% growth in your previous quarter. So all Wall Street wants is growth. So now you're growing, but you're growing slowly. Right? So even NVIDIA, it's not that NVIDIA is not growing or they're losing. These companies are all growing, but they're not growing as fast as Wall Street expected them to grow. So hence, this is down. So maybe if I find some time, I want to go and look at AMD and see if I want to open up a position in this. Now you can make your own decision. I don't have any position on AMD, and now it is back to where it was pre-COVID level. It's a little tempting for me. What else? Tesla AI Day. I spent some time while driving, by checking what the Tesla had. Of course, it was a YouTube which was playing on the side, what the Tesla was showing. And all we did on the AI Day was these humanoid robot. So this is what on the Tesla AI Day, which is where Tesla comes and talks about the things that they're doing in artificial intelligence. This is a way for them to recruit engineering talent. So they brought this humanoid. This is what they unveiled. This is called Optimus. This robot came and waved, did little dance move, not enough, not too much. But the whole idea was that, hey, this robot can be used to do some chores, right? Picking up the boxes, working in the factories. There is I looked at that video, which was, I think, 15 minutes. CNN or CNET, they had consolidated, provided a summary of what Tesla had showcased in AI. They pretty, in my opinion, pretty lame. I don't know why they're even doing this. Maybe, this is what Musk does, right? Try master of deflection, try to bring in new stuff while the old ones are still pending to be delivered. So this one was a prototype, and this will be when they will actually have a production ready, which they will sell. But today, the humanoid, which is supposed to replace a human on the factory floor, actually needed 4 people to be moved, because this doesn't work right now. And then they had to carry it away. So anyway, what Musk says is, it will, I think, turn the whole whole notion of what an economy is already in its head. This is going to be a world changer. Nobody had expected this. Is going to improve the productivity, and then we might have millions of this on the world in a few years, right? Very typical Musk narrative, which at least I'm tired of hearing it year over year. But If I go back, Musk promise, FSD should have been available, full self-driving should have been available in 2019. I don't see that here. Semi-truck was promised to be available in 2019. I think it was on Friday. We got a news that probably it will be shipped in December 2020. 3 years later, 1 million robot taxi should have been flying on the roads by end of 2020. I don't see a single one yet. Cybertruck has been delayed and delayed. I don't know what's the new date now is. Now let's add Optimus to it. So yeah, I don't know. Anyone else watched their AI day? What's your feedback if you had seen AI day presentation? I found it to be pretty lame, to be very frank. I mean, you go to Funak, you go to a Honda, they have much better industrial robots than what Musk was showing. And I'm like, if you need it for increasing, if you need an industrial robot, first of all, there were questions around why you need that to be a two-legged humanoid, because it is difficult to balance in the factory. Should have at a quadrupole, right? With the four legs, easier to do all that work. But in any case, I think there are a lot of companies that already have those factory robots. I don't know why are they even doing this. Anyone have a different thoughts? Do let me know. But another drama continues on the Elon side is, I love you not, I love you not, I buy you, I won't buy you, I'll buy you at this price, I won't buy you. Out of a blue moon, suddenly Elon came and told, oh, I'm going to buy Twitter at the original price of $54.20. Quick refresher, Elon earlier this year, I think in April, did an unsolicited bid and announced that he's going to buy Twitter at $54.20. Twitter pushed back on it. Elon pushed back on it. Twitter board of directors then agreed to sell themselves to Elon Musk. And later on, Elon Musk started to have a cold feet and he told, I don't want to buy it. Twitter sued Elon Musk. Now the case is being fought in the court of Delaware, the Chancery Court of Delaware. And the trial was supposed to begin on 17th. So now Elon says, oh, you know what? I want to buy it. And not even at a negotiated settlement, nothing. So I'll buy it at the original price, which was $54.20. Of course, Twitter shares jumped after this news. Where is Twitter now? You had a huge jump after this news when Elon told, okay, we're going to buy it at $54.20. For me, when it comes to Elon, nothing is final until it's done. So there is a little bit of a conditional buy because it's pending receipt of proceeds of the debt financing. So it means he still has to raise money to fund this purchase. So if that doesn't happen, Elon, we don't know. He might come back and say, oh, you know what? I don't want to buy it. So anyway, the trial was scheduled on October 17th. Now they've requested judge to postpone the trial. And the judge has postponed the trial to October 28th, saying you've got to close this deal by October 28th. Otherwise, we're going to trial. Otherwise, both the parties settle among yourselves. Elon is ready to buy it. Let's close the deal by October 28th. Otherwise, let's go through the trial. So while all these things were happening, what's happening on the Tesla, the main business? We had the worst week since March 2020 on Tesla because the deliveries of the cars were lower than expected. So when that happens, market didn't really like it. I think I do have a chart. This is what happened to Tesla shares. It's down almost 30% in the last 3 weeks.
Vivek,
So now if you're Trusted Tesla is available at a discount of 30%. So they're wondering if, and actually the expectations were higher because of their Germany and Texas factory coming online, right? But they couldn't. So other one could be, are they facing a lot of competition from China, right? We'll see what happens, but only some tailwind that I saw. So these all we're seeing the headwinds around surrounding Musk. One tailwind we saw on Friday was, hey, the semi truck that we talked about is probably some truck will be delivered 3 years late. So Pepsi will receive a semi truck from Tesla, in December. Sam says Musk is a genius buffoon. He's an eccentric genius, and world need to find a way to live with him. He is what he is. He'll the world. He's a genius, and also he is the world's richest person. I don't think world care about being genius, but because he is the world's richest person, he can do whatever he's trying to do. Now, given the fact that the markets have changed, the price of Twitter is now, the overall valuation of the companies in the tech sector has changed. How is he going to close this deal? Will there be investment bankers who will still help him in raising it? He's the richest guy. Every Wall Street bank will come and try to help him, right? Because in the future, they can get a lot more business from him. So bankers don't care whether it's right or wrong anyway. That's a one breed. Some of them will sell their kids or grandmothers if they were to. So to get a deal. So we'll see what happens. Does Elon have a lockup period until October 19th for selling Tesla stock? Oh, I'm not aware. That's a good point, Jay. Is if he's going to sell more of his shares to raise additional funds, that's not going to be good for Tesla stock. But I thought he already gave a breakup of how much money he's going to bring in by selling the stock, and also how much he's going to raise through friends and family, how much they're going to raise through debt financing. So I think that's what they have to do. All right, so the other thing was Rivian recalling nearly all of its vehicles over some loose fastener, which will basically, you can't control the steering. That's going to be the worst thing if you're a driver and steering doesn't obey your command. That's the worst thing that could happen. So it looks like all the SUVs that are the trucks that Rivian had sold, they are recalling almost all the vehicles to fix this problem. Could this be a tailwind, maybe a short-term tailwind for Tesla shares? Who knows? So we'll see on Monday what happens, because these two news of Tesla, selling a semi-truck, eventually delivering a semi-truck, and the Rivian, these news came on Friday after the market closed. So we'll have to see what happens to Tesla share on Monday. And like Dave says, if you don't own Tesla share, good time to get some discounted shares. Yeah, I don't own it, but I don't know if I still want to own this. I have a love-hate relationship with Tesla shares. 2021, I made decent amount of money by doing options on Tesla. 2022, I haven't traded much on Tesla.
Vivek,
I don't know if I can get bullish at this price point still. Jay, he's still short a few billions. If he dumps Tesla, it will put more down. Yeah. If he can't raise debt financing, then he has to sell the stock. It will put a big pressure. Cool. All right, that brings us to the last topic for today, which is an underrated, a secret business of Apple. So, which is Apple headphone division. So I read through an article, probably will quickly skim through this on and how the strategies that Tim Cook and Apple deploy and still to stay at where they are in the market. You may or may not agree to some of that, but let's quickly go through some of the big points around it, right? So sometime next year, Apple is gonna unveil excuse me, something stuck in my throat. Yeah. So sometime next year, Tim Cook will unveil a headset that mixes virtual reality, augmented reality. His code name is N301. And this is coming through the some trademark filings. Okay. So we know, there are many companies that build headsets. There are Facebook, Sony, HTC, and now Apple is announcing that they're gonna, and Oculus from Facebook, right? But Apple is again gonna build their own headset, and so it works. So Apple has been working on a headset for now 7 years and has almost 2,000 people. So we don't see that that business yet, but the work has been going on for almost 7 years, right? And 2,000 people is a big amount. Right? So let's talk about what else. While everyone has been yawning over the last few new phones, over the last few years, the narrative on the Tesla, because Tim Cook hasn't invented anything. Right? Steve Jobs was a masterclass inventor. Tim Cook, he's just running the ship. We aren't seeing much invention on iPhone. Every time you just have might be a bigger screen, better camera, nothing game changer, right? So while everyone has been yawning over the phones, Cook has created the tech industry biggest success story, which is AirPods. And I really didn't know about how big the AirPod has become, right? So those weird dongles are now a punchline, and they are everywhere. They are super expensive, like Samuel saying headphones are overpriced. The headphones are not out, but these dongles, they are overpriced. They're like, latest version is almost $250, right? These are not the best instrument though. These are not the best headphones that you can find in the market. They are fragile, have just okay bass, right? Looks like a Q-tip. Sometimes they get clogged with earwax, right? But still, it has become a big business. So that's what was more interested for me to find out what the heck is it, and how does Apple actually pull these things off? That you could get around, you could get away by selling okay device. It is overpriced, and still people rush to buy it. So if you look at the numbers, so Apple doesn't disclose the sales of its headphones, but these old headphones, etc., they all get clubbed under the wearables, homes, and accessories, which is the fastest growing line of business. And that grew, from 2016 to 2021, it rose by 245% to now $38 billion. The wearable home and accessories is now $38 billion. It means maybe AirPod is around $20 billion revenue. And this is $20 billion is one of, it's a big, we put it on a S&P 500, is going to be one of, So top 50 companies, just the AirPod business. That itself is now close to $20 billion. And AirPods are what, 6 years old? So what does Apple do to make this thing successful? So let's read a little bit through it, right? When Apple unveiled it, they mentioned that AirPod users should expect truly an amazing Apple magical experience, right? Even though the AirPods quality is not good, but the overall experience, which means including the overall ecosystem, is going to be great. So number one, it works out of the box, no setup required. So if I'm having an iPhone and if I buy, let's say, Beats, or if I buy Galaxy Pro, or if I buy JBL's headphone or EarPod, I have to go through the process of pairing it, right? You press a button, the blue lights start to flash, you go to your phone, say connect, it connects. But the beauty about the AirPod is you just bring it closer to your phone and it recognizes the AirPods right away. And immediately it pairs it up, right? And these iPhones actually come in a case. You don't have to bring their AirPods come in a case. You don't have to even bring take out the AirPods and bring it near the phone. If you're holding your phone or your phone is on your table, you open the case, iPhone will recognize it right away and will do all the pairing job on the back end while you're taking out your AirPods and plugging it in your ear. So that the whole experience become very seamless, right? Now, why Apple does it and how can they do it? Because they got a proprietary version of a Bluetooth. Right? But you can't do that with, if I'm, let's say, having any other earphone, but it'll work only with the AirPods, right? So if I have an Android phone and I were to use my AirPods with Android, I have to go through the whole process of going to the Bluetooth, tapping on it, and then say connect, and then my AirPod will show up, and then I'll say, okay, now connect to AirPod. But I have to use with iPhone, very, very convenient. You just open up the case, it's already connected. Right? But so this, I agree, this is a great experience for the users, right? But something else made Apple wireless headphones more appealing. The company made the wired ones worse, right? Now, if as a consumer, the wired one became worse, you don't have any other option. So iPhone 7 was the first to jettison the traditional headphone jack. Now all of them, they just come with their lightning port. You can't use any other, the commonly available your wired headphones, because they all come with 3.5 mm jack, and Apple doesn't support that anymore. So they made that stuff worse for users to use, and the whole idea was to push the customers to buy AirPods. Now, some of you may find it ethically wrong, but I mean, for them, it's plain business. How can we sell our AirPods more? Right? What is competing with AirPods is your wire headsets, or your wired earphone, right? Just make that difficult. So if you look at the AirPods and the other earphones from other manufacturers, the overall revenue generated for ear wear, Bose, Samsung, Sony, and Apple is way, way ahead of them. Way ahead of them. So what Apple does always, and this is why, if we were saying that, come on, the iPhone sales are not growing, who cares? As a shareholder, I don't care too much on just that one. Because what Apple is trying to do is to milk their users through the overall ecosystem. The ecosystem that they built around, with iPhone being in the center, and of course, there are only limited number of adults who can actually buy iPhones in the world. And if I already reached most of them who can afford it, of course, their iPhone sales will slow down. But then they build another business of services around iPhone, which was not even a thing 3 years ago. It's a big chunk of Apple revenue now. Now they're building this AirPods around it. For me, it looks like Apple knows how to milk and squeeze money from their consumers. So, this success of AirPod, which right now is accounting 5% of our revenue, represents a triumph of inertia, sums up the company's success after Jobs. Right? Apple introduces a product that works well with the iPhone, then does what it can to make competing products compare poorly. So there are better and other earphones available. Apple will make sure that it's difficult to use those. The $120 the author pays for the iCloud subscription is the same sort of a thing. The premium version hasn't been useful enough to make me cancel my Dropbox subscription, but I need to keep it to keep the photos on my phone backed up. Right. So let's talk about, then they talk about AirTag. For years, Apple rivals have argued that iPhone ecosystem violates the antitrust law. During a Senate hearing, Kristen Daru, lawyer representing the Tile, accused Apple of systematic abuse of market power. So I remember Tile. Tile is basically, a tag that you can attach to your purse, so that if you lose your purse, you don't know where you left it, or you can see it on your phone where it is, right? And it used to be available on Costco, so I remember that. Tile makes that fob you, it's that attached to your key or to your purse so that they don't get lost. Shortly before Apple released its own version called AirTag, it stopped selling other company products in its store. AirTag are as easy to set up as AirPods are, whereas competitors like Tile don't get access to that kind of a setup shortcut. So Apple's this Bluetooth is proprietary. They don't tell other competing product like Tile how they can use that proprietary Bluetooth to just do a seamless setup. So Jay says the same thing. I was impressed with the AirTags. Use them to track my luggage, easy to pair by holding case to the phone. Exactly. Now you can't do that with Tile. You have to take extra steps to pair the Tile with your phone. That way they make it difficult. They have their own proprietary stuff that they do. And it's not just limited to AirPod and these tags. How about the text? Like we use that iMessage stuff. For more than a decade now, text between iPhones have used an Apple-only system called iMessage. Text from iPhone users show up in a blue bubble, which has some special features. So if you and I have iPhones, if you're texting to each other, it'll show up in a blue bubble and has, like, if you're typing it, I could see that you are actually typing it because those dots will appear and those will move, those will undulate. So I know that the other person on the side is typing. But if it's a non-iPhone user, it appears in green bubble, and this is how they actually, differentiate and kind of annoy the Android users, because now Android users could be left out of a group chat or miss the phone missed messages from iPhone users. And it's a subtle way to tell guys, you don't have iPhone. Right? Among the many online dating, many indignities is a green bubble can make a person as undesirable. So small things, just to push and make sure, hey, you want an iPhone. Apple could fix this, but it doesn't want to. That's more interesting. Right. So can they make it easier for the Android users of Android message to interact and have the same experience? They could, but they won't, because they are worried, saying doing so would make it easier for parents who owned iPhones to buy their kids cheaper alternatives. So they say, we don't want to fix it. So iMessage amounts to a serious lock-in. I actually never paid attention. I knew that some text does appear in a different way, but I never knew what was the reason behind it until I read through this. And then I realized, oh, there is a whole strategy behind this. Nothing is done on ad hoc basis. There's a reason why it appears in a different color. Right. Anyway, so there is like I was saying, they could fix it. In the latest, I think there was some product. We had that later where on the event where AirPods were announced, one of a member came and told, guys, why don't you fix it so that my mother, and there is a non-proprietary RCS. There's a protocol which if every cell phone manufacturer uses it, then it will be same experience for across it. So one member from our audience told, hey, why don't you fix some of this stuff so that the videos which I send my mother can see it? And Tim Cook's response was, buy your mom an iPhone. They don't want to fix it. If Apple were merely trying to create the best device, this non-proprietary open source will be no-brainer. So if you say, is iPhone the best device around? No. Galaxy and Samsung phones have much better cameras than what iPhone has. RCS messaging standard, because it's being used and being probably more engineering bandwidth spent across many companies, may be better than iMessage. But Apple is not in the business of making the best devices. As much as the iPhone is an $800 phone, it's a constellation of subscriptions and accessories that can add up to another $800. Right? You got Apple Music, you got Apple Care, you got Apple Pods Pro, and blah, blah, these things. And that's where they're looking at to deliberately trying to, in some cases, not improve the product, is then continue to sell the other things and keep the customer in that tight ecosystem. How long will it continue? Who knows? Maybe regulations will come in and force Apple to make it more open. Open up your Bluetooth protocol for other manufacturers to use it. Then anyone can build a tag, air tag, or a tile which will seamlessly integrate with Apple, with iPhone. Well, we'll see. Maybe it's regulations only can force this. Jay says the advantage over tile is not the setup, it's the fact that there are millions of iPhone keeping track of the tag. Yeah, with tile, people must have a tile app installed and active. Again, difficult for the experience become difficult. You gotta do more actions. The Sam says US arrogance, that's why Panasonic VHS beats superior Sony Betamax. Yeah, I agree. There were two video cassette recorder protocols, and VHS was the one which was successful, even though the Betamax was more superior. And EU has mandated single standard for physical charger connectors, step in the right direction. That is right. I think this news came in this week. Only, I guess EU has finalized on the Type-C USB port for everything. Now, Apple, if you're holding an iPhone, you need that Lightning connector. If you're having a Mac, you need a C port connector. Things are so different, but it's a great that regulatory bodies are coming forward and say, what the crap is this? Everyone, please use the same connector. So at least we'll get rid of many wires that are, lying around. Not good for environment. But then again, don't blame Apple, blame human vanity who want to be associated with similarly premium products. I mean, any luxury or vanity products exploit this. No, Rob, yeah, you're right. We have inherent need. People have inherent need to see themselves in that club. That yes, I do an iPhone, or it becomes a status symbol, and Apple is just trying to exploit that. I would say that applies to every luxury product, not just Apple. Why would I want to buy Maserati? I want to make a statement. That's more of a making a statement act than any utility value. Same is the case with iPhones and the AirPods. But the fact, and I had both. I have an AirPod as well as the other one. I got an AirPod very recently, and I've not gone to the other the generic earbuds because it's become so seamless. Right? AirPod falls out of I take it out of my ear. Whatever am I playing on my iPhone stops. So overall experience is so good. So my previous one, which is a generic one, it's lying as an emergency in case I lose my AirPod. Yeah, I stayed away from AirPod for many years, but this year I bought it and I had to pay through my nose, but I think I'm using it. I'm liking that. Jay, does anyone have a good tax preparer that's specialized in stock market traders? Well, I don't know anyone. I also want to find out a lot more about the wash sales. How does that apply when you're doing options? I don't think I haven't come across someone. Cool. So that's the last topic, guys. Sometimes I do want to read about some of these business strategies and how some of these companies, the way these companies find out ways to make money. For me, it was a revelation in terms of and Apple is one of my top 5. Probably it's just number 2 in my portfolio. So I'll still hold it. I think they still have a lot more products to come in. And I'll continue to hold in my portfolio, guys. All right. I think that's all I have for today. We can hang around. Have any other questions? Can chat about it. Otherwise, enjoy the rest of the weekend. Anything else? Any other stock that you're looking at? Adobe. if I was not focused on reducing the number of takers, I would have bought Adobe. It's right now the only concern on the markets got concerned about their super expensive Figma acquisition. But I think there is a reason why Adobe bought at that place. Over a few years should become okay. But right now I think I still have around 70 tickers. I'll have to do analysis. How many of them are ETFs? How many of them are the ones that I can actually follow up? And this is on my watch list. I haven't bought it yet, but yeah, Adobe is like high on my watch list if I want to add additional ticker to my portfolio. All right, looks like nothing else. So thank you, everyone. And guys, have a wonderful rest of the weekend. Markets. So on Monday, looks like there's some sort of a holiday, because when I was looking at the Treasury, so some portion like Treasury is closed. You can't buy Treasury bonds. Banks are closed. Oh, there's a like Monday is what? Columbus Day? Is that it? Okay, yeah, Monday is Columbus Day. Yeah, so some stuff might be closed, but I think the stock market is open. Get that plumbing fix, Bob. I'm at my peak level of frustration when it comes to the whole plumbing stuff. Is it like the agency doesn't have people to send across? I've waited for a few weeks now. So today, eventually, hopefully, he'll turn up. Was supposed to be between 11 to 1, so still have some time. I'll see. Cool. Thanks, everyone. Let's talk again next week. Good luck for Monday. We'll see what Monday brings for us. Hopefully, let's see if it's going to be October. Bye-bye.